Welcome and get ready to dive into the thrilling world of investments, where numbers dance, money talks, and the unexpected always keeps us on our toes. Warren Buffett is well known as one of the best investors of our time. According to his recent 13F filings, which gives us a glimpse into the investment strategies of the world's top financial minds, Warren Buffett has sold his stake in Activision Blizzard. For those keeping an eye out, this might not come as a surprise. Berkshire made a mention of it in an SEC filing earlier, and it even made its way into the news. And now, it's taking center stage as the most significant revelation in Warren Buffett's 13F filing. Back in 2022, with Microsoft's plan to acquire Activision Blizzard and to expand their Xbox empire, Warren Buffett stepped onto the scene and bought Activision Blizzard. Buffett referred to this as a workout or a risky arbitrage move. He explained that he wasn't buying Activision for its business, but rather because of the potential profit that would bring if the acquisition took place.
Microsoft announced they were going to buy Activision for $95 a share. At that point, Activision becomes a different kind of security, whose value depends not on what the market price does, but whether a given corporate event occurs. So anyway, we now own 9.5%, something like 9.5% of Activision. If the deal goes through, we make some money, and if the deal doesn't go through, who knows what happens.
Back then, you could get your hands on Activision shares for about $81, yet Microsoft was aiming to snag them all at $95. This move promised a potential 17% gain if the acquisition succeeded, a tempting prospect that caught Buffett's attention. This kind of profit on a seemingly straightforward buyout was a sweet deal. But as fate would have it, the deal ran into major roadblocks from both the FTC in the US and the UK's Competition and Markets Authority, leading to an ongoing debate. Interestingly, more recently, Activision Blizzard shares rallied to $90, indicating that folks were pretty confident about the deal's outcome. However, Buffett had a different plan in mind. His 13F filings showed that he decided to sell off a whopping 70% of Berkshire's Activision Blizzard shares in the second quarter. He clearly had his reasons, and it looks like he wasn't going to stick around for the resolution of the ongoing saga. And if you were keeping an ear out, he sort of gave a clue that he might have been thinking along these lines. Just go back about 3 months to the Berkshire Hathaway shareholder meeting and listen to what he mentioned.
Well, I think in terms of what we do with stocks, we don't give information except when required to, which is in the 13 for whatever we file. But I would say this: I think Microsoft has been remarkably willing to cooperate with governing bodies, and I mean, they want to do the deal, and they've met the opposition, it seems to me, more than halfway, but that doesn't mean that it gets done if a given country, in this case the UK, wants to block it. They're in a better position to block it than the United States. I don't know how it turns out, but if it doesn't go through, I don't think it's through any shortcoming by either Microsoft or Activision. Not everything that should happen does happen. And I think the British government's making a mistake in this case, but that's life in the big cities.
Well, now we have the full picture of Buffett's actions. He chose to sell the stock. But wait a minute, Buffett only let go of 70% of his stake. What about the remaining 30%? Are there still some shares Buffett is holding on to? Well, the answer is yes and no. Buffett has sold all his Activision shares he purchased after Microsoft announced the deal. However, Berkshire Hathaway still has a stake in the game. Back in the first quarter of 2022, Buffett began snagging Activision shares. But before that time, Berkshire Hathaway had already bought a whopping 14 million shares of Activision. Fast forward to today, and their latest 13F filing shows they're still holding on to exactly the same number of Activision shares. Anyway, in his latest 13F filings, Buffett's calling it quits. His chapter in the Activision Blizzard saga concludes. If you're an Activision Blizzard shareholder yourself, don't be too hasty to jump to conclusions about the Microsoft-Activision merger. Buffett's exit doesn't mean the deal will not go through. It is just that, according to Buffett, he would rather deploy his capital somewhere else. Buffett tends to step away when he's uncertain about the outcome. But, if you want the honest truth, ever since his departure, the market's confidence in the acquisition's success has been growing stronger. It's like a story with unexpected twists, the final chapter isn't written yet, and the tale keeps evolving. So what else does the most recent 13F tell us? We can see that Apple now weighs more than 50% of Berkshire's portfolio. To put it into perspective, the next largest stock, Bank of America, accounts for just 8.51%. It's truly astonishing to see this stock keeps growing to this substantial position since 2016 when Buffett first purchased the stock. Is it too risky to have a single stock weighing more than 50% of the entire portfolio? I guess if you are Warren Buffett, you can do that. But also remember the stock portfolio is only one part of Berkshire's business. They've also got investments in insurances, railroads, and energy businesses. Interestingly, Berkshire also made a significant reduction in Chevron, which carried a position roughly around $20 billion. The reasons behind this reduction aren't crystal clear, as Buffett usually doesn't trim his holdings. We can only guess that it could be related to tax management or maybe he's simply taking profits. Remember, in the first quarter of the prior year, Buffett made hefty investments in Chevron, and the stock has climbed approximately 25% from that point until the last quarter. This could be a move to safeguard profits on those shares. Berkshire Hathaway continued to purchase more Occidental Petroleum shares in the prior quarter, making it one of the top 6 heavyweight positions in their portfolio. It is worth noting that Berkshire now owns more than 25% of the entire Occidental Petroleum Company. Clearly Buffett likes the management from OXY. Besides, the company is also distributing solid dividends and creating value for its loyal shareholders through share buybacks. Berkshire Hathaway also increased their stake by 25% in Capital One Financial, while trimming down by 39% in Celanese and cutting their General Motors position in half. They scaled back by 60% in Globe Life, exited their positions in McKesson, Marsh & McLennan, and Vertiz Energy. Additionally, they introduced 3 new stocks to their portfolio: D.R. Horton, NVR, and Lena Court. In a nutshell, Warren Buffett's recent moves in the stock market show us that smart investing involves calculated risks and careful choices. Diversification and a long-term outlook remain crucial for success. So, whether you're a seasoned investor or just starting out, these insights remind us to stay informed and strategic in our financial decisions. And if you've enjoyed this video, don't forget to give it a thumbs up and hit that subscribe button for more awesome content like this in the future. Thanks for hanging out with us, and as always, I'll catch you in the next one.